Alrighty, traders. This is Blake Morrow. You are listening to the Morning Edge Morning Edge webinar. I almost said the daily roundup and mixed it all up. Anyway, hopefully you guys are all doing well. Obviously today, a little busier than normal. The reason why is we made the announcement today with bringing on the Forex Flow team. We've got a lot of new traders in our chat room, which is awesome. I love all the guys that are over there. You know, some are more advanced. Some of them are newer, but really all great people. So just really cool here. Like here's just some comments that have been coming in this morning, like Five Magics. I've been watching him for the last few months. He was just mentioning how yields are. We were talking about yields, and yields were coming off here globally, and that's something that we got to pay attention to today. And let's talk about that for a second, really quick. So if you and before I get into these into all the charts here, I do want to talk about yields. Let's look on the like here's the 10-year. Hitting the 50% retracement, really big. No, when I say 50% retracement, this is long term. 50% retracement, big slide in the 10-year. You can see the 30-year, even the shorter end of the curve is coming under a little bit of pressure today. The 5 years almost at the 200-day moving average. Really, pretty big moves. But also keep in mind that the bond market is very much, and here's the 10-year, this is the 10-year. We're probing above the 200-day moving average. DSI is a very overbought, extreme. We're at 91 or 92 on DSI, which is a ridiculously extreme number. And you have to keep that in mind when you're dealing with yields or dealing with the bond market. That to me suggests that we might see a bounce in yields, maybe as early as today, maybe over the next couple of days. So just start being real careful with these types of moves. Hold on really quick. I had somebody just ask me, Brand just asked me about Zoom, and if you're just figuring out how to log in to this webinar or any of our exclusive webinars, you can join right here on this link. Obviously, you're here already, you know how to do it. He was just asking about the email because Zoom is the one that sends out the emails. So I just got to confirm how that happens because I'm not 100% sure. So we'll see. Anyway, let's get into the charts especially before the equity markets open. So equities, by the way, you're seeing a little bit of a pullback right now. We're really on key support. A couple of things that I should note is that gold and silver are diving lower with the dollar strengthening. So just keep that in mind. Cryptocurrencies, the Bitcoin's trading below 30,000, but it hasn't really broken down yet. I would have thought by now we would have seen a really big meltdown in Bitcoin, but we haven't yet. And, equities, like I said, they're holding up. I mean, vulnerable. I said yesterday, and I'm going to stand by this, that as long as we stay above yesterday's lows, which comes in at 42, let's call it 42.35. All right. So that's going to be support in the S&P. 42.35. Oops. 42.35. Is that what it? Let me just make sure. 42.35. Yeah. That, as long as we're below there, that is going to be, or as long as we're above that, excuse me, that's going to keep us from turning outright bearish. I'm going to keep us in bullish right now. Remember, we're in a wedge, so it's a breakdown below that support that turns us instantly bearish. Now, what you'll notice today, which is really interesting, is previous support did act as current resistance, and that means this is key. So 42.90 is key. Sorry about the typo. 42.90 is key. And I could say, you know, like we said yesterday, if we get above 42.90, then we're going to 43.40, right? Okay, let's just see what numbers we had from yesterday. 42.90, 43.40. So yesterday we marked up 42.90, and look, we held it, right? I mean, we held it just as we should. So the good news is when you look at equities, when you see equities right now, they are acting and respecting technicals as good, or, you know, as well as you'd expect. So that's the good news, you know. So, you know, when you're dealing with like the S&P, you know that this is really pivotal. And so if we break above it, guess what? It's going to be super bullish. All right. Let's take a look at, let's go to currency. So here's the euro dollar back at the, fresh new lows. But remember, we did this yesterday, right? We're at triangle support or wedge support. You know, we were testing down here yesterday, and all of a sudden the euro, you know, spiked back up above 118. So I wouldn't be surprised if we see some of that action again. But I'm going to really note that this is, let's just go ahead and take a look at the daily chart really quick. Let me make sure and confirm this. Okay. Just in case we start to peel off, 117.09 is horizontal support. It's also 38% retracement. I am going to write down that number, 117.09. Well, 117.10. All right. Since we are at lows for this session right now, I'll probably just mark up 117.50, because, you know, let's imagine this, we continue to drift along this this trend line. You know, we might get as low as 117.50 today. You know, it's possible. Resistance is obviously yesterday's highs, or we could write down 118.25. This is still bearish. If you're not in the chat room, I just went long a little bit of sterling. I mean, I bought it literally a few pips ago at like 83. Why? Because I think it's really oversold. I do. Intraday, we are below the 200-day moving average. It's not bullish, and I'm not in a big position. Let's make sure we mention that it's a half size. So, you know, as Ryan mentioned, this 135 level is really key. We are below the 161% extension. We're below the 200-day moving average. We would have to get above 137 in order for us to turn, you know, to take off the pressure now. So this is bearish, and it has been. But the 136.90 is the 200-day moving average. So like I said, we have to get above today's highs, basically. Okay. Support now would be, let's see, you have, look at all the spike high right here. You have a spike high right here around the 135. This is be 135, roughly 135.30. Okay. We could definitely probe down there. Sure. Why not? All right. Aussie's trading heavy. I did close out the short yesterday. You know, as we were probing this 161% extension, we could extend to 72.50, which would be the target of this triangle right here, right? Let's try something else too really quick. Low, high. That 161% extension comes in at 72.80, 72.90. So I'm going to write down two levels, 72.50, 72.90. It is still obviously bearish. I would think it would be the Greek gods singing to us if we can get a move back to 74 cents. Does anybody know what the Greek gods sound like? Well, I'm sure Stelios and Steve do.
I want to hear you say it, basically.
Oh, thank you for rallying back to 74 cents so I can short you. Yeah. If you've ever been to a Greek Orthodox church, and I know Stelios obviously and Steve have, I do a pretty good impersonation, don't I? I mean, come on.
It's very good.
Yeah, I mean, you just hear this for like an hour and a half, and you're like, wow. And I've had my share just in my, my short American experience, because, obviously I was I was married in Greece. So that had to happen. Okay. Let's say we broke through this 69.20 support in the Kiwi finally. So that's good, because now that kind of confirms this move. So that is 69. Oh, that was I'm sorry. Resistance is going to be 0.6920 because that was the breakdown point. We are bearish for right now, but remember, it's early in the day, so this is going to be 68.70 is the 127% extension. Now remember, the RBNZ has been really a kind of a bullish. It's been more of a hawkish, if you will, central bank. It's kind of fallen behind the curve as far as seeing dollar strength come up. Man, this Canadian just slumped pretty good, and I think a lot of that has to do with crude holding. But anyway, I'm gonna say that it's still early in the day for the Kiwi. If for some reason we close back above the 69, actually it's 69.20. If we close back above that, you got to be really, really careful being short the Kiwi. Dollar Canadian, we're really struggling. Remember, we've had a big rally in the dollar Canadian. Me, you, a lot of us have been long the dollar Canadian for the last several weeks. It's been a great run. We're well above the 200-day moving average. I think any move back down to 126.50 or 126.15 is going to be very well supported. But it's really struggling up here, and like I said, I think it's because it's had such a great run. And I've taken profits. I took profits yesterday. Now we're just kind of consolidating. We see a move back down to 126.50. Yeah, it's going to be really well supported from that trend line, but expect resistance at 128.25 if we get up there. That's 127% extension. So just, keep that in mind. All right. Swissy. So here's the Swissy. Somebody asked in the chat room, I think it was Curtis, who's one of our Forex Flow peeps. So welcome, Curtis. He asked, anybody have a view on the Swissy? And I know some people kind of chimed in. I really have zero views on the Swissy. I don't. I really just think that we're capped here at the 618 retracement. You can see it right here, right? We're capped at the 618 retracement. I think dollar strength overall is helping the dollar Swiss, but at the same time, the fallen yields is capping it. So you're getting this, like this push-pull tug of war in the dollar Swiss, and it's hard. I mean, it's hard to get it to move when it's got two different forces going in opposite directions. So the 618 retracement is at well, I think this resistance, first of all, is going to be channel resistance will be at 92, let's call it 92.40. 92.40, then 92.60, right? 92.70, sorry. I've got the microphone in front of my face, so I can't see the keyboard all the time. Support is at 91 cents. It's in range. Dollar Norway. So we have, man, this thing squeezed the hell out of it. I mean, I think this is resistance though. It is. I think it's resistance, but it is squeezing like nobody's business right now. Next resistance is going to be 911. It's obviously bullish, but you know, with crude oil starting to find a base here, you got to be a little careful being long up here. I've taken mine off as of yesterday, but you know, it's obviously extending. This is a 618 retracement of this move of the highs from November to the lows. 618 retracement, 161% extension of the cup and handle. We've already completed the cup and handle, so yeah, I mean, we're in kind of uncharted territory with the US dollar, Norwegian krona, but it's, you know, you have to just be a little careful with it at this point. I think that, you know, if you're chasing it up here, just be cautious, especially if stocks start to bounce back. I mean, this thing will come right back under pressure. So resistance 911, we're basically there. Support on dips. You guys know I'm really bullish. I have bids underneath the market that have not been able to get triggered. Obviously, when it's not even retracing. So now any move back down to 880, 885 is going to find buyers. Let's see. US dollar, Mexican peso. No, now the peso finally, you know, we call her Salma in the chat room. We at the ForexAnalytix chat room for Salma Hayek, since most of us men remember her from Desperado, and you know, what can I say? There's nothing else to really say there. 2020 will be resistance. Then we got 2023, which is the 50% retracement. So I'm going to write down 2020. It is a little bit of a surprise to see us up here and stocks not be pulling back. So, but I'm going to keep us in range for now. You know, obviously the dollar max is trying to probe up. I think that support will be back down here at these this previous high, low that comes in around 20. So let's just mark up 20 for now. Most people that know me, I mean, know that I like playing the dollar max on the long side when I feel there's some risk off. Right now, I'm just a little nervous about laying into stocks at this moment, just because, you know, obviously we're holding yesterday's lows. So makes me a little hesitant about trying to chase the dollar max up here. Dollar yen, fallen yields, I'm surprised hasn't weakened the dollar yen a little bit more. So support, you noticed yesterday we stopped at the 618 retracement. There's the low, here's the high. I mean, we came to it to a T. I have not had a good feel about the dollar yen recently. I've been shorting a lot of yen pairs, like the Canadian yen and Euro yen and stuff like that. But I'm a little hesitant about the dollar yen. I think it's being pulled like the dollar Swiss. It's being pulled by a few different forces. So I'm not super comfortable with it at this point. But I do think that this is resistance. Okay. This comes in at 109.75. 109.07 is support. So 109. I'm just going to write down 109. And then resistance at 109. Oops, where is it? 109.75. Shoot, I forgot the decimal. 75. And I'm going to keep it in range. Again, I don't have a good feel for the yen nor the Swissy. So Dude, the Dow just popped. NASDAQ's under a little bit of pressure. Dow's bouncing. S&P's bouncing. Let's go, Sterling. Come on. Euro Aussie. By the way, I got, hold on. I need to put this in the trades room. Hold on. Got filled another quarter Euro Aussie short. Well, I wasn't looking where'd the trade? It got short at 161.023. It was an ad from earlier. So I'm here. This is the trades room, guys. For those of you that are not, that are just on the light version. So we have, general chat here, right? And then like our trades here. I shorted some Euro Aussie earlier today at 82. And then I said, I'm going to add if it gets above 161. Let me show you guys the reason why. I was long this thing for the last several weeks down here, spun out of it on this move last week. And then we hit the 161% extension. We've been stalling here the last few days. And so I just sold a little bit today because it's not, even in the risk off that we're seeing, it's not pushing higher. And so that divergence has me thinking, hey, maybe I'll just get short a little bit. So, I'm short around these levels, just letting you guys know that. Okay. But I had to mention that in the trades room. Let's go continue on with the dollar index. Where am I at? Dollar. Okay, here's the dollar. So the dollar is really trying to break out. We are above that 93 level. But again, I'm going to say that to be careful, especially with the ECB meeting coming up, got to be really careful about that. Cedric, hey, are you listening in? Cedric, are you listening in? Cedric, if you're in the chat, say that you're here listening in. Cedric.
You can see him in the attendees.
Yeah, and he chatted in the chat earlier. Cedric, if you're listening in, I need to get your information today. You won the Euro Cup 2020. So you get some ForexAnalytix gear. I'm going to send it to you. So I was going to shoot you an email, but I just saw his name here. So that's cool. All right. So I'm going to mark up the dollar index highs as 93.16. We have to stay bullish, obviously. But I'm fearful that the dollar index just keeps probing this, trend line in a wedge. And that I mean, with the ECB this week, okay, I'm a little worried. Cedric, if you're here, jump in the chat and say hello. Cedric, I got to send you some gear. Okay. For winning. And that's great. Okay. Continuing on. And hopefully you're just in the United States. Isn't it funny, Stelios, every time somebody wins something, like remember we had like 10 winners?
Yeah, and half of them were in India or something.
No, I want to say like one was in the United States, 9 of them were outside of the US. So it doesn't matter if it's going to India or if it's going to, the UK or Australia, it doesn't matter. I have to just fill out custom forms.
Yeah.
And man, I tell you, it was such a pain. It was, and I was so upset. I was like, we're never doing a big giveaway like that again. Because I sat in the post office for hours. This is obviously several years ago, but oh my gosh, that was such a pain. And not that I didn't want to do it. It was just, like, when's the last time you've actually written with a pen for more than like 2.5 hours? My hands hurt.
Never.
Very much a first world problem. So let's get into.
Oh, there he is. There he is. He just wrote. He's in South Africa. Oh, you're lucky.
Oh, dang it! I'm gonna need to send. Can you pick it up in Miami somehow? Is there any way we can work that out? I'm just kidding, Cedric. Hey, congratulations. He's in South Africa. I'm going to be sending you an email, so just be aware, because I'm going to shoot you out some ForexAnalytix stuff. Okay, and congratulations, by the way. S&P, big resistance again. Oh no, we already talked about that. I think we wrote it all down. Let's go over to gold, silver, and Bitcoin, and let's go from there. So here is silver. Silver is on a really key level support. I marked this up yesterday, but let me remove that, because that was basically saying, hey, listen, if we break through this trend line, which is, here's the 78% retracement, we break through 2480, silver should go. I mean, it should go lower, like back down towards 22. For those of you guys that are trading silver, just think about that. I mean, look, this is a big range. I think that the 22 to 20, well, $30 range is pretty big, right? But if we crack through this trend line here, you know, that means we've also taken out the 78% retracement. You know, that would be kind of a bearish event near term. And with the dollar ripping, that doesn't, you know, that shouldn't be surprising. Now, today, as long as we are below 2550, I don't know if I'd be on the long side. So I'm going to do 2550. This is key resistance now. Gold, again, 1790, 1835. I think those are the numbers we wrote down yesterday, if I'm not mistaken. 1835. Let me double check. And for those of you that are new, just note that I don't go and look at this from yesterday. So I don't go back and look. I like to get fresh numbers. So I've written down 1755, but I think that, and that's going to be these lows right here. But 1790 is a near-term support. So we can write down 1755. All right, Bitcoin, we are below 30,000, and I will tell you, if Bitcoin breaks 28.7, we are in serious trouble. And who's in trouble? Stelios?
Michael Saylor.
Michael Saylor is going to be in big trouble if we break 28.7.
Well, not 28.7, but 26. But yeah, close enough.
Yeah. No, if we break
5 minutes road, cigarette.
28. What was the low there? Let me go ahead and write that down. 28.6. Okay, so I'm sorry, it's 28.600. Yeah. You know, especially when my 14-year-old continuously tells me that Dogecoin is going to bottom out around 16 cents. Yeah. So just so you guys know that. He told me that this last week. Maybe it does. Who knows?
There's huge support around here in Dogecoin and Ethereum as well. If you look at a daily chart, you'll see.
We can look at that here in a second, or I'll let you guys look at it. I'm going to say that this is intraday support or resistance, excuse me, which will be 31,000. Obviously, you guys know that I'm just continuously bearish. So 31K and then 36,500. And I mean, really, the 200-day moving average is well above that now. It's, I mean, the 200-day moving average is now like close to 40, I think, if I'm not mistaken. Or it's way up here, 44,000. But I mean, I'm bearish while we're below this resistance. And actually, you could probably take that down to this resistance. I'm just going to keep that in there right now. Okay, that's it, guys. Here is your bias chart. It is finished. And so Steve Stelios, pretty big news with the Forex Flow peeps joining forces with us. It's been great. I mean, I have to reiterate, those people that have come over from Forex Flow, I've and just so you guys know, I've been watching their traders for the last several months. I've been in the chat room lurking. I haven't said anything. I've been watching. Like I obviously know I got a good sense of who the more advanced traders are, who are the more beginning traders. But what I've seen is just really nice people that are just, we all have the same, intention of just trying to make money in the markets. And, everybody's out there helping each other out. And it's very much a complementary community to what we have. Ours just happens to be a little bit bigger. It's really, it's nice to see some of these very talented traders come over. And it's been wonderful. And plus the knowledge that Ryan and his team bring has been great. By the way, Dow is almost at the highs of the session. S&Ps are at highs of intraday, but about ready to break out. So just, guys, you got to be careful, especially if yields bounce here. And I think that there's a good risk that we could see a squeeze higher in stocks. I know a lot of people are expecting stocks to go down right now. But Steve, how often do stocks really go down?
Not very frequently, right?
No, they don't. I mean, look, we're 4 points away from that 4290, and we get much above 4300. We're going to start squeezing from all the people just laying into the market. So, I don't know. I'm a little skeptical about being, you gotta be I'm a little skeptical about being too aggressively short here. And, I've been playing the dollar on the long side, which naturally makes me more of an advocate for selling risk. But after the last week of us seeing risk off and that probe below that trend line and no follow through, you got to be careful. You've got to be careful. And then you start to see crap like this. Look at the dollar Canadian. Just here, let me reset that chart. Look at the 1 hour chart in the dollar Canadian. This seriously looks like we're going to do this. We crack through the support here. We're going to see a quick little, profit taking of all the people like me that have been long for the last, 2 weeks. You're going to see some profit taking, some stops of, people that got wrong footed chasing the market higher yesterday. So I think that you have to be very careful on either side of the market today. And look at crude bounce, by the way. And I should reference that. And then I'm going to let Steve and Stelios take over. As I was saying in the chat room, crude was holding support. Here's the 1 hour chart. Go look at yesterday, or look at these lows. Look at this trend line from right here. I want to mention Craig in the chat room yesterday bought crude right here, and hopefully made a buck. And somebody else was buying it. I can't remember who else yesterday. Maybe Patty, who's also in the UK, was buying it yesterday. Anyway, look at crude really respecting the broken triangle trend line. 618 is right around 64.50. A lot of support down here in crude. So watch the dollar Canadian. Crude bounces back to 68.70. The dollar Canadian is going to be trading down at 26.50 again. Anyway, I'm going to let you guys go. I'm going to pass it over to Steve and Stelios, but I want to say,
so we're free to go.
You are free to go. Hey, Stel, did you get the chart?
Who's getting the charts? Oh,
No,
I got the
you...
chart. Yeah.
I posted
it. I posted it like 5 minutes ago.
Oh, you did? Okay, then
Come on, man.
Sometimes it update. It used to update automatically, but I think since we added this new feature on our platform, it doesn't do it automatically. It refreshes once you leave it and come back. So anyway, cool. All right, guys, have a great one. Welcome all you Forex Flow traders. So glad to have you, and have you part of the team. Guys, I'll let you take over.
Thank you, mate.
Thanks, guys.
Thank you. Okay, so
Stel,
small bounce today, and like we said on yesterday after the as the markets were dropping, if you zoom out a little bit, this is not even a blip in the S&P, in the Dow, in the DAX. So yeah, go on.
I'm sorry, still. I'm sorry. Gary said I have the dollar Mexican peso. I have the numbers on name on each side. I do. I don't know why, but I'm going to put it's supposed to be 20 even. I'll fix that and I'll post it. So don't worry.
Thank you.
Yep.
So it's very easy to want to become very bearish risk. But for me, as I said before, as long as yields are at these levels and actually dropping even more, 115, 10-year US, I really don't see how we can have a sustained move lower. I mean, if you think about it, even if you drop in the S&P a further, 10% from here, we're still back to April levels or something like that. So obviously, if you're a day trader, these are very nice times. You have up days, down days. But for people like me who look for direction and a more medium-term, have a more medium-term view, for me, unfortunately, nothing's changed yet. What is changing though is cryptos, and we saw Bitcoin drop below 30,000, so it's taking out support. We've been saying
it really feels like the bottom is going to drop off.
It does
any moment, Celio.
And we were saying on Face and here on the Morning Edge for days or weeks that, or days, however many it was, that it was just lingering at the bottom end of this channel, of this, bear flag. And we said the longer it stays here, the more probable it is going to break down, and it broke down. And if you look at Ethereum and if you look at Dogecoin, because these are the really popular ones now, but look at Ethereum.
Ethereum is testing for the third time this.
Yes, this is
horizontal
huge.
Support area.
Huge.
Yeah.
Yes, you've drawn it very well, I think, and Dogecoin is the same. It's it's
it is.
It's actually a massive support. And for Dogecoin in particular, I mean, the next level is like 5 cents, whatever it is. So
9 cents I would be looking for as a next level.
Yeah, true.
Yeah, and when we can be there in a day.
and with cryptos dropping like that, they are influencing other markets. I know not to a great extent, but they still are. They are. So this bearishness in cryptos is going to be spilling over to other asset classes,
and vice versa.
And vice versa, yes.
We see we see this turn lower that in essence became more apparent yesterday, resume and persist for a few days. I think that's going to be the final push for cryptos to produce another strong leg lower.
Yep. And bonds, like we said before, they're rallying. The bond is something I'm watching. And for people who know me, I put trades on and I keep them for days or weeks. And my last short in the bond was really, really nice. I got lucky as well. But I think anywhere around, let me have a look at my chart. Yeah, it's like anywhere around 177.5, 178. I want to short it again. I think it's feasible. I can't actually see your chart very well because I'm on my laptop and it's a small screen, but I don't know what's that. Oh, we're there. Okay, so you have a different. I look at the weekly chart. Anyway, bonds keep going. Equities trying to bounce. The dollar kind of still trading relatively well. And metals don't know what to do. Gold is up today, so. Are we at a turn? I don't think so yet. I'll put it this way. We had one down day, which was obviously a strong down day, but in equities. But I don't have enough conviction to say that. Oh yeah, this is it. So
we held yesterday on the critical trend line supporting the S&P. Also, the 50 DMA was there. So in regards to the S&P, which is the global barometer for risk, we haven't broken down yet. Yeah, we had, quite a big down day, especially for, recent market type of movement. It was quite a big day, but it wasn't enough to produce a technical breakdown in the S&P. So yeah, I think that jumping the gun and being overly bearish here, right on top of support, is probably not the best idea. Now, I'm not saying that we can't break down. We absolutely can, but all I'm saying is that before we break down, we should always have the understanding where the trend, which is the direction of the main trend, right? And it's higher and it's not damaged yet. Yes, we've had a pullback, but putting this in context, at the lows of the day yesterday, we were 3.5% below the all-time highs, right? And the all-time highs were, to put again things in context, were 93% higher from where we were 15 months prior to this. So pretty sure 3.5% below these all-time highs does not constitute some kind of a, once in a lifetime bearish type phenomenon. What else, Telio?
Yes. What else? Oh, we actually had some data today. Interestingly, German CPI, German PPI. Did you see that number? Year on year, 8.5%.
Yep.
So this is another transitory number that we're going
through.
through.
Yeah, transitory. Yes.
U.S. building permits and housing starts roughly at expectations. So really not much. We have the ECB this week.
The fun part is people don't realize, Telio, it's not just that the PPI is leading CPI, which is, which is a given. I mean, it's one of the most basic stuff you'll find in an economic book for obvious reasons. PPI is the price of inputs, right, for businesses to create, other products. Is that a lot of people might have noticed, it's not really tough to notice, the divergence we have between between PPI and CPI, and I'm not talking about the time lag, right? Because of course there is a time lag. I mean, from the point that businesses buy products that they use to create other products until they actually create them and sell them, there is some time lag, right? That's why it's a leading indicator. But even if you account for that time lag, you notice that there is a decent discrepancy between the numbers we get for CPI and PPI, right? And a lot of people think that it's because businesses keep eating the difference. I mean, they keep squeezing their profit margins to be competitive. I think that's a small part of the truth. The biggest part of the truth, in my opinion, is the fact that CPI is significantly manipulated. Don't forget that CPI is a number calculated by substitution, by using methods like substitutions, creating a basket of relevant goods, using hedonic adjustments which adjust for the quality of products, while PPI is a very simple mathematical concept, which is like, how much did the business buy something, X, okay, how much did it buy the month later, Y. There is no mathematical gimmicks adjusting the prices of PPI involved in the prices of CPI. So in my opinion, if you want to have a better idea of where real inflation is, PPI with a little bit of a lag, as I explained, is a much better indicator than CPI is or ever will be.
That is very true. Very, very true. Yeah, I don't have much else to say, actually. There's a question about GDX, which I have positioned, so I want to answer that. So basically, GDX gold miners, I have a long from above, which is underwater, and it's a small position. I want to add more of those and of silver miners. I'm waiting for this to move to unfold. I think I have a zone in GDX, which is around 30, between 30 and a half and 32.
Yeah, 31 and a half. Yeah,
31 and a half, yeah.
It's a very powerful support.
That's where I'm going to be. Zone. That's where I'm going to be adding a little bit more. And I'm very patient because this move could have legs. As I've been showing the silver chart, I always said, I mean, talking about silver, this is obviously gold miners, but I always said I'm going to add one way or another. I'm either going to add on the breakout higher, or I'm going to add if we get lower towards 22, 23 bucks. And there are similar levels in gold.
Yeah,
so
agreed.
yeah.
The GDX looks bearish in the short term, if you ask me.
Yeah.
But yeah, I think, we are unfolding a corrective move lower, and following that, we most likely than not going to see an explosion higher, both in gold, silver, gold miners, silver miners, junior gold miners, junior silver miners, platinum, and all the relevant,
Yes.
metals and products.
I agree. It just needs you just need patience, and it depends obviously on your leverage. I don't use leverage on these, and just need a bit of patience for the levels to come to you.
Yep, absolutely. So here's the GDX, as we mentioned, like 3050 to 3150, like a major support area. I think it's extremely likely we're going to test it. I wouldn't be even surprised if the market just dipped its toes in the water below, because how devious the market can be, right?
Always.
A lot of stop losses there, so probably they might try to first kill all the weak hands that are long, before the market can freely move to the upside. And having to do with silver miners, since we're at it, last time we had a look at it, I was calling for a pullback with 3 possible downside levels from which we can find support. One of them was this one, as you see. The next one was this one at 38.70, more or less the area we touched yesterday at the lows. And the other one is a little bit lower, the trend line support of this descending channel. So I think that silver miners are getting closer and closer to an area that is very hard not to buy, if you're asking me. Even from a risk reward perspective, the closer we get to this trend line support, the more appealing, especially just a little bit considering the fundamentals. How I can find any way not to be fundamentally bullish miners that mine monetary metals at the moment with what's happening out there. So it's not just a technical outlook, which looks very good in the medium to long term. It's also the fundamental outlook, which is, equally, if not more, appealing. GDX possibly took out the stops for the past couple of weeks and now might rally, but yeah, maybe better to wait and see a confirmation first. Yes, I think there is room for a little bit more downside, both in the GDX and SIL. But in the grand scheme of things, we're talking about a minor move lower in comparison to what I'm expecting that's going to transpire following that to the other direction, right, to the upside. So yeah, quite a big difference. Laura is also asking for SILJ, which is a very equivalent instrument. It just follows the junior miners. So we had this symmetrical triangle I was monitoring, and I expected the bounce from there. Clearly, we've broken through it. So, alternative interpretation, this can also be descending channel, exactly as we have in the case of SIL, right? In which case we can, because clearly if you look at the chart in the short term, there is nothing bullish to it as we speak, right? So in the short term, I'm not expecting a bounce from what I'm seeing as we speak. I think it's more likely to see also, as in the previous instruments, more weakness in the short term before we can actually strongly rebound higher. RSI at oversold territory also confirms that the market is really weak at the moment, right? As I've explained before, it's a much better indicator to use RSI for confirmation that the market is weak or strong than try to use it as an indicator to fade strength or weakness, because very frequently RSI or any other momentum indicator can remain oversold or overbought for much longer than you expect, right? So keep that in mind. So yeah, I looking at this, I wouldn't be buying SILJ as we speak, for a for finding a bottom here. I think more weakness is likely to follow looking at the chart. But again, I'm just short-term bearish, not medium or long-term. I think looking at the bigger picture, we're still in some kind of a corrective pattern, as you see, very much overlapping choppy price action following a rather sharp move higher. And I think it's a matter of time for the uptrend to resume and see at least one more sharp leg higher once we find the bottom, which, as I said, I don't think we're there yet, looking at the chart. Natural gas, a question about natural gas. I've warned you before about having to do with natural gas. When I was explaining that I'm rather bullish natural gas, I warned you not to confuse what's happening with crude oil with what's happening with natural gas, because these are actually two markets that can significantly diverge with each other. And you can see that as crude oil was pushing, lower with quite a lot of brute force yesterday, natural gas had absolutely no problem producing an update. And actually, we've now broken through the symmetrical triangle. We are at multi-year highs, and I think we're not done. I think we're on our way to the next upside objective, as I've been explaining for quite some time, which is at 410, right? Yeah, I see nothing that has changed here. And as I had said in advance, and I'm reiterating again, don't worry about what's happening with crude oil, because simply natural gas can do a completely opposite thing to what crude oil is doing without much of a problem. So that's that. You're long, good. That's the direction of the market you should be into if you wanted to be in any direction, right? And 410 is the next upside objective in natural gas, and I see nothing that changes my mind. I think technically it still looks, extremely well bid, very well behaving. So yeah, I don't see anything that would worry me if I was you here. Okay. What else? Yeah, USD yen. USD yen might have already broken down, but I don't want to be that strict. I mean, we're very close to this trend line support, but I want to reiterate what I said yesterday. Be very careful with yen pairs, because especially if USD yen breaks down here and starts producing lower lows with some momentum, all the rest of the yen pairs that have already had some really bad days, I think they can start depreciating with a lot more momentum than we've seen already. The pound yen has already broken through this corrective channel, so that points to probably a lot more weakness. Euro yen has done the same, right? Here it is. Aussie yen was the first one to do this. Here it is. Kiwi yen is the one that hasn't broken below its corrective channel. But in any case, all that has happened without USD yen really breaking down. So imagine if USD yen does break down, which I think is a very decent possibility. So be very careful with all these yen pairs. I think they can really accelerate to the downside. I mean, we are at the precipice of breakdowns, all over the board having to do with yen pairs. Now, one thing I forgot to mention yesterday was the Euro Aussie, Euro Kiwi, Pound Aussie, Pound Kiwi crosses, which have actually started producing interesting technical breakouts, right? Euro Aussie has broken out after a long period of time from this ascending channel. RSI is also confirming this move, right? Because at the same time, price not only broke through this channel on the price chart, but also RSI broke through this descending trendline resistance. Euro Kiwi has not done the same, but perhaps it's lagging. Pound Aussie, let me pull it up. Here it is. So Pound Aussie, intraday breakout today, yesterday, Friday, Thursday. So 4 consecutive days we've had attempts to break above the channel's resistance. So far we haven't managed to do so. And the pound Kiwi, as with the euro Kiwi, some distance from it. So, the question now in my mind is euro Aussie leading, or is euro Aussie sending a false signal, having produced a false breakout to the upside? Now, if euro Aussie wasn't there, the other three are still looking, exactly as they were looking a few weeks ago, a few months ago. I mean, looking at all these charts, I'm seeing a corrective rebound higher that sooner or later is going to fail to the downside. But I want to remind you that if for some reason we have a prolonged move lower in equities, it's impossible for these pairs not to rally, right? Because they have a very strong inverse relationship with risk assets. So bottom line, Euro leading or not, equities will tell us, right? Equities, resume a move lower, start actually producing lower lows and some proper corrective move after almost doubling in 15 months, then it's impossible for the other person not to follow you, Rosie. On the other hand, equities calm down and resume their, never-ending almost grind higher, then I think it's inevitable for all these pairs to just succumb to the, previous downtrends and resume to the downside. So I'm really monitoring these pairs and looking into seeing what's going to transpire here. Dimitris, Kiwi CAD, please, maybe current pullback, opportunity to go long. Let's have a look at Aussie CAD and Kiwi CAD. Since we're going to have a look at one of them, we might as well have a look at both of them. So first of all, here is Aussie CAD, right? Aussie CAD still coiling in a rather tight triangle. So far, RSI not looking really bullish. I mean, RSI has just grinded higher towards neutral territory after a long period of stabilizing, right? So judging from the RSI and price action, nothing really bullish happening. Kiwi CAD looks somewhat different, right? Because we've had this descending wedge, we've broken to the upside, which definitely in the short term constituted a bullish breakout. On the other hand, RSI has not reached overbought territory, which in essence doesn't point to momentum behind this move so far, at least. And we've stalled in this horizontal support resistance area at 88.60. Now, looking at the Kiwi CAD in isolation, it's not a bad idea for somebody to try to buy a pullback for more strength, right? I would be cautious though, because I'm not seeing any convincing evidence yet that this market is turning higher, right? So I understand why somebody would want to buy a pullback. Risk reward would be rather appealing. But I wouldn't bet the farm on it. You know what I mean? I'm not looking at this chart and looking forward to participating to the upside of this market. So yeah, that's that. So yeah, cautiously bullish is the best I can say about how I would feel here. FSLR. So we've had this breakout in FSLR and a pullback. Now, as long as nice RSI divergence there as well, which, you know, hinted to this pullback. As long as we trade above this trend line resistance, which, you know, might act as support, there is a case to be made for more strength, right? Now we go below it, then we have to start thinking about the possibility, which is anyhow a possibility, that there is a larger corrective pattern in play here, right? Something like this, which means that we just need to be more patient until something actually happens in this market, right? So yeah, these are the two ways I would be looking at this market. We're either still in a prolonged consolidation, or we've broken out, we're pulling back, and we should be nearing a turn higher and the continuation to the upside. I think we're going to find out soon, because you need a turn higher and showing some, you know, proper momentum to the upside. Now, having to do with IWM that you're asking, IWM has broken down from this multi-month formation that we were monitoring. Actually, this formation is in play since the second half of January of this year, right? Let's see if backtesting it can prove that this is now an important trend line resistance, right? Now that we've broken through it after having it act so many times as support. I think this is going to be significant to know if we should be looking for more weakness or not. If this market wants to be bearish, I think we should be turning lower today, roughly from these levels. Now we push through this again, then I'm going to be more inclined to start looking at this market as more of a rectangle, right? With support being a little bit lower. But in any case, let's not jump the gun. For the time being, this might actually be a legitimate breakdown if, as I said, this area around like 217 or so holds as a resistance. DXY. Yeah, listen, the DXY looks really unimpressive, especially in comparison to what should be happening, having seen this you know, risk of move during the past few days, and is testing once again this ascending wedges trend line resistance, right? So I would remain neutral as long as this resistance holds. We break through it, I think we should be looking at this moving towards 94.5, probably in an accelerated fashion, which would be my next upside target, anywhere between 94.50 and 95. Nice, nice area that gathers several resistances. Now, alternatively, we get rejected once again from this wedge, and we break through the trend line support. I think that's going to be a very bearish development, right? But until that happens, I slightly favor a bullish breakout and another not really big move to the upside in the DXY before the downtrend can resume. Because I've told you since the very beginning of this turn higher in the DXY, I expected a rebound sooner rather than later, but at the same time, I made it very clear that whatever rebound happened, I would treat it as corrective until proven otherwise. And I think that nothing has happened that proves that this is anything else than a corrective rebound. Just look at how long it has taken for this market to rebound so little, with equities actually underperforming lately, right? So theoretically speaking, DXY had the perfect conditions for a much better move higher than the one it has produced, and yet it hasn't managed to produce one. So yeah, I'm very, very, very skeptical about how much more of upside we've got left in this market. I think we have some, but not much. I'm watching the XY to see if it goes below 93, even for a short time. Yeah, I don't think 93 is going. You mean above 93? Because below 93, I mean, we're exactly at 93, so we can be below 93 in like 10 seconds from now, literally. So that level doesn't tell me much. In order for the downside to open up again, I would want to see a move below 92, right? That's the move I would be looking for. Until that happens, I remain more or less neutral here. ZM, which is Zoom. Yeah. Same type of question I posed for whatever was the other instrument we were looking for. Most likely than not, Zoom has broken out to the upside, right? So most likely we should be seeing a continuation higher sooner rather than later. There is, though, the potential of still being in a larger corrective move, right? That looks like this. In which case we might be seeing, more choppy price action and then more prolonged consolidation. Between the two, I think the bullish scenario is probably more favored, seeing what has happened so far. As long as we trade above this broken trend line resistance, right? VIX with a W. Yeah. This one is still refusing to decisively break out. It's toying around with the idea, and in the short term, this looks like a bullish type of consolidation, something like this, like a little flag. There you go. So, yeah, I mean, I think it's extremely likely it's going to be breaking higher soon. Extremely likely. Let me see if there is any question I've missed. No, that's it more or less. Okay, good. SMH, okay. We had the last one coming through. Yeah, nice rejection from this trend line resistance, right? Very nice rejection, which keeps us neutral in the short term, but most likely bullish in the medium to long term, right? I mean, this is still a very bullish type of consolidation after a huge move to the upside. So keep that in mind. Currently, again, in the middle of this ascending triangle, so short term, you can't be anything but neutral. Now, there are two ways you can play this. Being long, if we get closer to the trend line support, so closer to 230, or waiting and being long in a bullish breakout to the upside, right? These are the two ways I would approach this market, and for no reason I would be looking to be bearish as long as we trade above this trend line support from this ascending triangle, right? You should definitely favor the direction of the trend. The alternative is just gambling, in my opinion. Like to buy it at 230. Yeah, I'm 100% with you. I just said that. I agree with you. Towards 230, technically speaking, looks like an amazing buying opportunity. You're risking very, very little, and you're entering in the direction of the trend. I mean, there's not much more you can ask than that. Okay, everybody. Don't forget to join Blake in 2 hours from now for the daily roundup webinar. And I'll see you all tomorrow. Have a wonderful rest of the day.
Thank you,
Bye-bye.
Steve. Thank you, everybody. Thank you.
Bye-bye, Stel.